everyone, and welcome to Boothy's Bites, the monthly update with the man himself, Mr. Chris Booth. How are you, Boothy?
Yeah, good, Jackie. Good, yeah, really good. It's a bit of a wet and miserable May. A bit of a mouthful trying to get it out.
You have to come up to Queensland. It's beautiful here, sunny.
Okay, that's an invite. Okay, I'm coming.
Everyone come up to Queensland. No, don't. Property prices, don't. Well, anyway, let's get straight into it. So, I'd love to hear the latest news from the RBA.
Okay, cool. Well, it's been one of those funny months, really. And for me, I'm all about, I don't like the media. I think they're just in it to sort of sell a newspaper, which I'm sure that's what they've got to do, right? So I think what we've actually had is this sort of situation whereby that having a chance at a headline is big news, right? And the inflation data came through for the first quarter this year, and it was a bit of a blip, yeah? So we've had extra costs associated with fuel, some services. I think schools have gone up. I mean, everyone's feeling the pinch. So the trend of inflation sort of coming down in line with the RBA's plans was a bit sort of off in that report. So a lot of economists are coming out now going, oh, no way, interest rates are going to go up. Well, it was good to hear Michelle Bullock talk about, her thoughts around it. I thought she was really sort of strong and firm and fair and saying, look, long term, the trend is still going in the right direction. And we feel that is where inflation is going. It's going to go back to the norm over the next sort of year and a half, but there's still lots of work to be done, which is, I think that's a fair reflection. So, the good thing for me is that, she was pretty strong in her message. It's still business as usual. Don't think we're going to see an interest rate increase or decrease very shortly. She wants to see that inflation. It's still the same message. And what that means really for me is that the biggest or most important piece of data we're seeing in the next few months is going to be the next quarter CPI, which is in, I think the data comes out at the end of July. So that ties in really with the August decision. And I think that will be, a real pivotal sort of point for the RBA giving direction to markets about, interest rates going up, down or sideways for the next period. So it was a good one. So that's my forecast. No change this month, no change next month, and then a big meeting in August.
And what about your predictions for the handing down of the budget on the 14th of May?
Yeah, it was Albanese government have been quite open about, trying to commit to the tax cuts, which they made when they came into sort of power and beyond. So, it seems as though those tax cuts are going to come into effect, which is going to give some cash back to, mums and dads, borrowers, which is a good thing, right? It's always interesting when you've got, this give back of cash, which is, the fiscal policy or the budget, which is kind of, it's a bit of friction against the monetary policy because they're trying to stop people spending and creating inflation, but the government are giving a bit of money back. So we're kind of not working together as well as they could, which is cool. To be honest, I think the budget will be I think it will lack, headlines for sure. These tax cuts are already expected and sort of locked in for July, but the tax cuts aren't massive. So it's really not going to inject a whole heap of money into the system. So again, we've got some headlines around the budget. We're going to expect some cuts, but I think it would just be a little bit less noisy post,
Yeah. Yeah, nice. And so what are the banks up to with their interest
Well, that's
rates?
the interesting one, right? So that's more fun. So these dirty banks, all they're talking about these days is giving money back to shareholders. Okay. Now, for me, when I was a young boy, banks were there to offer a social service and a value to their deposit holders and their borrowers, right? And they've lost that connect with, I think, the social side of things. Secondly, mortgage brokers, naughty, because we're giving so much good service to our clients, more clients are using a mortgage broker than ever before. I think we said last month it was over 70%, which is really cool. And what the banks are saying is, hey, brokers, if you guys want to use brokers, well, that's taking money from, us making $20 billion worth of profit this year as a bank. That's not fair. Well, what I'd say to the banks is they get their act together, start providing better advice, have a bit more of a social conscience, and more clients will come and engage them directly rather than coming through a trusted partnership with a broker. So they're complaining about their net interest margin and their profits, which I think is great. So, but the good thing about their profits, they're going down. More money is being spent paying the brokers for the great work that they do for their clients. So the engagement with a broker is way better. So, firstly, I just want to thank the banks for supporting the broker business and paying us the money that we deserve. And secondly, thanks for the clients for supporting the mortgage brokers and using our advice and services. So a bit of a naughty one for the banks. What that means for interest rates, though, is the banks are trying to claw back a little bit of the interest costs associated with some of these loans. So they're attracting new to bank money with cheap discounted rates, but then once you're in the system, they sort of increase those interest rates slightly to claw back a bit of margin. So so watch those games. So what I would say is don't trust the banks, come see your broker.
We could make that into a
Yeah.
song. And so, do you have any favourite lenders at the moment for borrowers?
We've got, so really nicely this week we've been introduced to Bendigo Bank. So Bendigo Bank, they've had Adelaide Bank for many, many years. And from a broker perspective, we've been sort of limited to the Adelaide Bank platform and lending, which has not been bad, right? But certainly it's now great to have Bendigo Bank as a sort of a national business on our panel. And they've got some really good rates. They've got a really strong community banking service, well supported with branch networks, good technology and infrastructure. And their interest rates are extremely competitive and their products are fantastic as well. So we met with a lady called Paris the other day. She's launched the Bendigo service and bank to us, which is really exciting. So that's good for our clients as well. And we've already got some applications for clients going there who are looking to save some money. I think, right now, every client that we're speaking to is really conscious about the interest rate because obviously that dictates, the cost of the loan product. Now, if you're a strong borrower, I mean, like got good income and a low loan to value ratio. So your loan, let's say it's $1 million and you've got like $500,000 loan against $1 million home. That's 50% loan to value ratio. That's a low risk for the banks. So they're being attracted by extremely low interest rates. And we're seeing that, with many of the lenders now having this tiered pricing system to discount those rates. So there's a massive promotion on, trying to attract these good quality clients to banks, but not everyone sort of meets and hits those benchmarks and hurdles to get into those lenders. So a bit of education from us is around the change of the credit policies that the banks are using to assess loans. So, from a borrower perspective, when we first talk, we're always talking about, best rates, but then what we're doing then is overlaying, what the most appropriate lender is in terms of their personal situation, which takes a little bit more conversation. So sometimes you don't get the best rate, but we're going to try find the best rate for you with the most appropriate lender. And I think that's sort of what we're working with right now. And in fact, in my mortgage broking history, I don't think we've ever had to reach out to so many different lenders to provide these solutions for clients as we do today. We have a panel of over 60 residential lenders. In the old days, we'd probably stick with, maybe your top 5. But right now, I know our operations team are probably working with, 20 or 30 different lenders at any one time, which is, a lot of paperwork, a lot of different systems and a lot of different ways to do things. So, yeah, it's pretty interesting right now, yeah?
Yeah, shout out to our ops team. They're amazing.
Exactly.
And lastly, what are some trends you're seeing at the moment with refinancing and first home buyers?
Yes, so there's 2 things, I think, again, going back to that cost of living and things, we're doing a lot of work around cash flow budgeting. So especially interest only maturities and fixed rate maturities. So we've still got lots of clients coming off those 2% interest rates from 2 or 3 years ago, which is, trying to have those conversations with clients where their interest rates now are over 4% more than they were before. And then resetting that budget again, that's a real challenge. So that's a bit of work we're doing. The second part is working with investors to make sure that their interest only repayments are being made in line with their negative gearing benefits that they get to sort of manage cash flow better. And that's an interesting one because a lot of clients, when they're actually applying for these interest only extensions, they may not sort of qualify back with their original lender. So again, we're looking to work with their original lender to re-extend interest only, but often because interest rates have changed so significantly, we might have to look at alternate lenders who are more supportive of investors than the existing lenders. So that's, again, it's an education process and things. And then lastly, we have a massive amount of young people and young families trying to buy their first home. I mean, our pre-approval ledger is huge. And again, I've not seen this in a long time. And that pent up demand is really, first home buyers. And I'm saying first home buyers crazily, it's like, 40-year-old young families as well. They're first home buyers looking to buy their, $1.5 million, $2 million property. Well, they're still first home buyers. It just happens to be they're buying at 40 and it's a $2 million property, right? Which is pretty crazy. But nonetheless, it's a really tough market for those clients. So the conversations we're having are twofold. Number one, what is your affordability and borrowing capacity, and also what are the lenders doing with regards, what affordability as well. And yeah, that means some clients are just, really want to borrow the maximum that they can. And it just means that we're no longer working with like your main bankers because there's more flexibility with some of these second tier lenders who've got more favorable terms to borrow. And I'm talking about clients now who have bonuses, commissions, overtimes, all of that sort of alternate income outside of base income as well. So again, we're doing a lot of work with these first home borrowers, educating, talking about, their borrowing capacity, obviously always looking for best rates, but it is a real hot property market right now in that sort of $1 to $1.5 million price point. And also, we're starting to see people coming back into the market from an investment perspective now, and their price point is in that sort of high, sort of, up to $1 million, So again, that space is pretty crazy.
Yeah, my gosh, we have to wait and see what happens
Yeah,
here.
I think so. Yeah, but yeah, so we're working with a lot of first home buyers, which has been fun.
Yeah. Well, that is everything I have for Boothy's Bites, unless Boothy has anything else to add himself.
I just want to have a big shout out, and you just mentioned it before, Jackie. Our broke women, we've got some wonderful mortgage brokers, there's no doubt about it. And they're the ones that get the accolades, the Google reviews and the shout outs and things like that, which is really cool because they deserve it, right? Often the people that aren't called out in our business is our operations team. And we've got a wonderful team. It's a growing team. They're based over in the Philippines, powered up by our business partners, Vital Business Partners. They've just changed their name to. So for me, a big shout out today has to go to the operations team. They're working so hard. Like I said before, they have to know all of these credit policies, paper, processes, procedures, pricing, forms for our clients to, lodge these applications. And they do a lot of work for the brokers. So the Friday shout out in Boothy's Bites May edition goes to the powerhouse. That's Lydian Operations and our marketing team as well. Woo!
Hey, go team!
Over and out. There you go. Drop the mic.
Well, Boothy, thank you so much for your time, your knowledge, your expertise, and we'll see you next month.
Jackie, just before we go, do you have a finance song we can share? I think it would add value to Boothy's Bites if you could do it.
Do you? Do you really want me to sing it on here?
Come on, it will pick up my followers.
Okay. I just need to give a bit of a backstory though. I did not create this song. It has gone viral on TikTok, and I posted on my Instagram that it's been stuck in my head for the past week. So I'm going to sing it for you all. I'm looking for a man in finance with a trust fund. 6'5", blue eyes. Finance, trust fund. 6'5", blue eyes. I did not make that song up.
See you, Jackie.
Thanks, baby. Bye.